During today's Asian trading session, spot gold has finally stabilized after experiencing sharp volatility in the previous trading days. It is currently consolidating in a narrow range around $4,330. Without the previous frantic fluctuations, and market sentiment has gradually calmed down. On the fundamental front, do you still remember the data released by the U.S. Bureau of Labor Statistics (BLS)? This data shows that underlying U.S. inflationary pressures have further eased. Initially after the data release, it directly strengthened expectations of a Federal Reserve interest rate cut, driving gold prices to surge sharply. However, the good times did not last. Subsequently, traders scrambled to take profits, and a large number of selling orders poured in, directly leading to a market reversal. Looking at interest rate cut expectations, the market's probability of a Fed rate cut at the January 28th meeting remains unchanged at 24%. It should be noted, though, that there is expected to be 60 basis points of rate cut space in the coming year, with the first rate cut likely to land in June. This expectation will continue to weigh on the U.S. dollar and is long-term bullish for gold. There are also new developments on the geopolitical front. U.S.-Russia negotiations will resume in Miami this weekend. If the two sides make progress in the talks, the easing of geopolitical tensions will weaken market safe haven demand, which is likely to limit the upside of gold prices. This is a key variable to focus on in the short term. In addition, investors must keep a close eye on two important data releases today. One is the Federal Reserve's most watched core inflation indicator, the Core Personal Consumption Expenditures (PCE) Price Index, and the other is the final release of the University of Michigan Consumer Sentiment Index. These two sets of data are likely to affect the market's judgment on Fed policy and may trigger a new round of fluctuations in gold prices at any time. Analysis of gold's short-term technical outlook. Looking at the daily chart, gold prices are still at a relatively high level in the previous upward trend, but after the previous sharp drop, they failed to hold the $4,350 level. This signal indicates that short-term upward momentum has somewhat weakened. Looking at the Relative Strength Index (RSI), it has pulled back after a sharp rise and is currently above 50, not yet entering the overbought or oversold zone, reflecting that short-term market sentiment tends to be balanced without bias towards either side. Regarding key levels, investment friends must keep them in mind. Short-term resistance levels focus on around $4,350 and $4,370, among which the area around $4,370 is Thursday's high range with relatively obvious pressure. If it can successfully stand firmly above $4,350 again, there will be a chance to retest the previous high of $4,374.68. For downside support levels, look at around $4,320 and the key integer level of $4,300. $4,320 is near Thursday's low, and $4,300 is an important recent support range. Once it breaks below $4,300, it is likely to trigger a deeper technical pullback, and the next support level will be around $4,285. In terms of operation, GZ advises everyone to remain cautious and never chase ups or sell downs. You can focus on the breakthrough situation of the $4,300, $4,370 range, and then adjust your trading strategy slowly in combination with subsequent data and changes in geopolitical situations. Disclaimer: all the above content is for reference only and does not constitute any investment advice. Any trading operations conducted based on this information are at your own risk of profit or loss. Want to receive real-time interpretations of gold prices and major market news as soon as possible? Subscribe, like, and share now. Thanks for watching.